This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the data sets, the SPY technical analysis, and the VIX for August 12th, 2025. And with that said, let's go ahead and jump straight into the data. Tomorrow is a very busy day as we do have the CPI in the morning at 8:30 a.m. The analysts and pretty much most of Wall Street is expecting and anticipating the CPI to come in slightly hotter. I'm actually against that. I think we're going to get very close to the same rate or slightly less. I could be wrong, but that's just a personal, what I believe. So we will see, and we will see how the market reacts to that based on how the treasuries react. And you'll be able to see through the HIG, the treasuries, looking at TLT, looking at like the VIX, UVIX, UVIXY, things like that. And you'll be able to gauge whether the market really took that CPI as good or not. Um, Personally, I don't think the CPI matters too much right now. I think it's really the PPI and the job reports next week that's going to matter. So yeah, 8:30, very important. The EIA short-term energy outlook doesn't really matter too much right now. The WASD report doesn't matter too much. Federal balance sheet doesn't matter too much, and the API weekly crude oil stock has been downtrending, so that does not matter too much either. So essentially, tomorrow is going to be very important in the early pre-market. Excuse me. Now, unless President Trump has anything to say in the afternoon or some other uh, out of character data set comes out or something, like a tweet, um, a statement from some Fed official, something like that, then we should just be pretty much expecting and anticipating the CPI for tomorrow. Now, moving into Wednesday, we do have a FOMC member speaking at 1:30, but other than that, it's a very boring, kind of bland day in terms of the data. If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime. And getting into the technical analysis, as always, let's go to our daily time frame and let's turn on our moving averages. Now, I do want to preface this video really quick. My wife is having a minor ear surgery tomorrow, so I very, very likely won't be able to respond. I may not even be able to do a video tomorrow night. It kind of just depends on, how the procedure goes and everything. It is a very simple procedure and you know, not to get graphic or anything, she does or they do have to put two little tubes in her ears so that the pressure in her ears can, you know, leave. Her Eustachian tubes don't open like a normal person, so um yeah, that's kind of my day tomorrow. Uh I very will likely be back on Wednesday. Again, unless something crazy goes on with this procedure, it should be a very, kind of in and out ordeal. It's not a very long procedure at all. It's a very safe procedure. I'm not really worried about the risks or anything too much right now. Um, so yeah, very likely will not have a video out tomorrow. Due to that. So yeah, let's go ahead and get into the technical analysis. Now, the market closed at 635.92, and we discussed this in our video last night. It was either going to have that rejection off the top of that channel, and I do want to just bring up the drawing for a moment. Um, I'm going to delete the inverse cup and handle for a moment as well. But the top of this uh, consolidation channel in the blue, let's go ahead and just turn off the moving averages and Bollingers for a second. So far, we are seeing a rejection from the top of that, which for the bears, that's a good thing. That's kind of what we want to see because that is forming a downtrend. Okay, downtrend means that this turns into an inverse cup and handle rather than turning into a bullish cup and then we see more downside. Okay. Um, so yeah, I just wanted to kind of highlight that so far. It doesn't mean that we can't swing back up and, go very bullish again, but I just wanted to highlight that so far, um, that's what we are looking at from our video last night. Now, again, the market closed at 635.92. The 5 mont is currently at 633.22, so it will be pulling up very slightly. As you can see, the 5 mile is kind of slowing down in how fast it is pulling up. The previous two sessions, not including today's session, it was pulling upward very quickly and then it's slowly starting to taper down. And I will discuss kind of the mechanics behind that in a moment. But with the market closing at 635.92, that being at 633.22, then the 5 mile very likely tomorrow is going to be around the 634 range. It might be closer to that 634.40 range. Just make sure you mark it down in the morning because again, now that we did have somewhat of a quote unquote selling day, we are kind of back into the 5 mile bounds again, which means that we are within the upper bounds of the 5 mile. If the 5 mile is going to be around the 634 range, then the upper bounds is going to be around that 636 range, okay? And the lower bounds is going to be around the 632 range. Now, the overnight market is up very slightly. It's at the 636.45, so very slightly above that, what we'd call that 5 mile upper bounds range. I wouldn't really look at that as like a 5 mile bounce or anything yet. That doesn't really qualify as a test or anything, so don't overthink that yet. Now, the 10 mile is at 632.08. And the upper bounds on that is at the 634, and the lower bounds on the 10 mile is the 630. Now, the 20 mile is not at that range yet, but it's starting to pull up to that 632 as well. As you can see, the 10 mile is slowly starting to pull downward, and I'm actually just going to put two trend lines here just to make it very easy to see. And that is the 10 mile. And let's put the 20 mile here. As you can see, the 10 mile is starting to get ready to pull under the 20 mile. The 20 mile is still trending upward. The 10-day support is still saying that the buying is not strong enough yet. So with that said, we are getting ready to see the 10 mile start crossing below that 20 mile. Now, that doesn't mean that's going to happen entirely. If we get a major, a buying day from here, say the CPI data comes in very cool and it leans towards a rate cut and the market takes that as very bullish, then potentially we see the upper Bollinger pushed and we can see that 10 mile pulling back upward. We could see the 20 mile still pulling upward, but sorry, my daughter's screaming right now. My wife's trying to brush her teeth. Um, the 20 mont will be pulling upward, but just, you know, uh, it will be behind that 10 mont. So tomorrow's kind of a really important day because of that. Now, the again, the upper bounds of the 20 mont and the lower bounds of the 20 mont very close to the 10 mont. Just off by about 50 cents right now. So you can do the math on that. It's pretty easy. Now, the upper Bollinger is currently at the 640.80. Now, it is going to very likely pull upward tomorrow if we do have a positive green day towards that 638 range. That would continue having that upper Bollinger open on the upside. Now, if we do have a selling day tomorrow and we do start pushing into these support or the uh, moving averages, then we will see the lower Bollinger start to open up. So that's a very key detail to pay attention to right now. Now, there is something to focus on here outside of all the moving averages. Well, let's circle back. Let's go back to the moving averages. If we start selling here, and if this was that major inverse cup and handle, then the 5 mile can very, very quickly pull underneath the 20 mile again. It's not above it very uh, far at all. For example, if we pulled down to say the 629 range for at least 2 sessions, that'd be enough to get the 5 mile to be underneath the 10 mile and underneath the 20 mile. And very likely within those 2 sessions, the 20 mile would be above the 10 mile as well, and the 10 mile would be pulled under that 20 mile range, which would be setting up the moving averages to be entirely bearish. Um, if you're thinking about the moving averages, generally the bullish upside is having it the 5 mile above the 10 mile, the 10 mile above the 20 mile, so on and so forth. The bearish side is the inverse of that, so you'd have the 5 mile underneath the 10 mile, the 10 mile underneath the 20 mile. And that's telling you that the market is wanting to push downward. Now, it's not entirely saying that yet, but it is kind of positioning itself to prepare for that. So just be aware of that. If we don't start seeing some major buying from here, then we will be seeing the 10 mile pulling below that 20 mile. And that is a very, very bearish signal. Okay. Um, Aside from that, turning off the Bollinger Bands and the moving averages, let's turn on the drawings for a moment, and I do just want to highlight something that I think a lot of people have misunderstood right now. Um, Many are assuming that this cup is finished right now, and let's be fair, I did not draw it curved like that. I was drawing it straight. The program curved it. Now, um, we have not pulled back up to the 639.85. And it may seem like to some that, oh, well, we were only $1 off from the high. For example, the high today got to 638.95, essentially 90 cents off that range. When we're expecting a cup to be bullish and closed, that means it needs to pull above that level or at least hit that level, and generally we expect it to pull above. The reason why, and apologize if you hear my daughter and my wife right now, my wife's trying to get my daughter into bed. We generally expect bullish structure to form above the cup. Okay. Um, or I mean the bearish structure to form above the cup so that you can get that handle created and actually form the bullish structure on the bottom. Again, that's how you get the cup and handle type structure to have that breakout. Okay, so really the bulls are looking for this to fully close. This is not a completed cup until this is fully closed. It doesn't hit that basically to the penny. It has not closed the level. Um, Very, very key. Just please don't ignore that. It's super important here. Um, because if that isn't the case, and if the bulls do not take that single dollar upside, then what does this turn into? This, as our already completed inverse cup, a rejection from there allows in the inverse handle to form. and allows our very bearish structure to complete. And this can be also considered a double top at that point, which this has a lot of structure like a double top. And I've actually been digging through the charts for the last 2 hours now, which is why this video is coming out a little late. But I've been trying to compare what has looked like this rally. And really nothing has come close to this other than the COVID drop. And I'm going to pull us back to it right here. Okay, and the reason why, and I'm going to pull up the drawings for a moment, is we have this major cup. Okay, and it took a very long time to fill. Now, on this major cup, we had the top of that bearish structure for the handle form, but it took a long time. That was not supposed to be circled that big, so I'm gonna just move it right there. It took a really long time to get to that point, and the market started to create that handle and actually had a fake out, the handle rejected, and it needed more liquidity to form a very large handle at that point to allow the move upward. Um, prior to that, prior to this big drop in price, there was this rally where we didn't really test support very much. We had the little support test right before this massive drop. Um, but even then, that's still not truly comparable. Even this range right here would not be too comparable. The only comparison right now is that we don't have this handle part. So basically erase that and continue having this area push up right here. So that green area would be continue pushing up, um, only except extremely extended. So it would be all the way out to where that green is right now. Um, and again, it's still not even that comparable. So we're kind of in uncharted territory, but at the same time, we do need to remember, uh, as always, the top of a cup should anticipate a large handle. I need to zoom back all the way to the beginning, sorry. Um, is that we should be expecting a very large handle to form from this type of cup. We haven't even seen the beginning of that. Uh, if this little handle is going to break out, then potentially it could form a handle and head to the upper bounds of, you know, the buying channel or, the upper buying channel. I don't think that's going to occur yet. It can. This is the range to prepare for that. But if not, if we continue seeing our rejection, then we can again start looking to that downside. And this is kind of the perfect week to have some major downside. We have the PPI on Thursday. We have the CPI tomorrow morning. We have some crucial retail data on Friday morning. And then next week we have the super crucial job reports again, which that's what originally caused that massive, I don't want to say market dump, but it was that massive market dump that last month. Um, so yeah, uh, I'm not exactly pushing against the bull thesis or the bear thesis, but again, we're still looking for a bearish, or yeah, we're still looking for a bearish structure at the top of this cup. We truly haven't had it. Uh, this can be counted as a support test, but it was not very strong. We did not stay down there for an extended period of time at all. And generally, when you have a support test below that range, you're generally going to see at least, 3 to 5 trading sessions of that range taken. Not it instantly being bought up, and um, yeah, it just doesn't feel like a true support test. It feels like it just barely pulled under, and now it pulled right back out. Um, Not something I look forward to in a support test. I look forward to, again, the major movement to the downside, at least a few days testing the lower Bollinger, and then from that point, we'll see buying support start to pick up, some bullish structure, and we can take off from there. Um, so yeah, that's kind of the thesis right now. Uh, we just need to allow some of this really crucial data to hit the market and see where we go from there. I went over my thesis in yesterday's video, how I do believe we are going to start seeing an acceleration in the treasury yields towards the downside. I think that the labor market and everything else is really going to start stacking up to create kind of a monster, um, for the economy. And it's something that the treasury is trying to control right now on the long end, and it's something that the Fed has really been trying to push off so that we don't enter kind of a zero yield environment, but we'll see. I'm not going to speculate too much on that. I do know that TLT is a super good buy right now, just because the treasury injections and everything else, there's going to be a lot of weight being pushed into TLT. Now, I do want to quickly go over the VIX volatility. Now, let's go to the hourly chart. Today we did have it pull back a little bit, but it did actually have a good session because even though it pulled all the way down to that 93.14, it did recover all the way up to the 97.09. And while it's not at that 98 range, generally the 98 range is when we kind of know that, okay, people are actively buying VIX contracts, they are actively hedging the downside. It's starting to get towards that range again. Now, if we see the CPI come in good tomorrow, this can pull down to the 88 range very quickly. I don't anticipate that. I do expect it to kind of form a cup and handle here and head towards the upside. Um, there's kind of just a lot more volatility within the system right now, and a lot of these data sets should bring in a lot more volatility kind of just on both ends. Because there's just going to be a lot of different thesis going on. There's a really big um, separation between the market that thinks that rates are going to go higher right now and the market that thinks that the rates are going to be going significantly lower. And I think it's a quite a large divergence. I think that the treasury market generally gets it right, and that currently they are seeing the yields going lower, while the market is acting like the yields are going to continue pushing higher. So that's just my opinion on that right now. Um, Now for the VIX, let's see what we got going on for drawings here. Okay. Okay, cool. So this is playing out almost exactly how we want it so far. We do have that left shoulder formed, the head has been formed, and now we are starting to work on that right shoulder. It does need, quite a lot more work, but if this right shoulder is going to be playing out, we should see some more pops towards the 18, 19, even 20 range again. Um, Potentially, I'm going to delete this cup really quick, but potentially, if this is going to start seeing some major upside, we can start looking for this to form a cup. And let me just go ahead and delete a few of these really quick because I want to show this smaller inverse head and shoulders that's forming right here, which would be very good for a larger breakout to the upside. So that's the volatility. I'm not expecting the market to continue pushing this down. we're kind of at a really major trend point, and while we can head down to that $10 range, that upper $10 range, I don't think we will. It's been since basically July 2024 when we were anywhere close to that $12, $10 range. We had a period during December when we were pushing those highs where we got down to the 1268, but we're still not even close to that. We've been building a lot of support heading upward. Um, and I do think we should continue to see some of that movement heading upward. I do think that we have kind of hit that part of the curve where we should see the VIX starting to pull back upward again and continuing within this major buying channel. This major buying channel has really large weight, and I'm just going to go to the weekly chart. This thing has been holding weight for quite a long time, um, literally years. So it's very strong. It should pick the VIX back up, quite a bit. So we'll see. Um, okay, that's going to be the video for tonight. Thank you, everybody. And let's see, hold on, I just want to make sure that I'm covering everything. Now, the HIG has been seeing some selling. I know the overnight price right now is kind of off, but the HIG has been seeing selling. We are looking at this potentially head and shoulders right here, which a lot of tech is starting to show, by the way. And they're starting to show on their weekly trends that they are pulling away from their upper Bollinger ranges, which almost always leads into a major sell-off. So that is something else I've been looking at tonight as well. As I said, I've been looking over things for a few hours prior to making this video. But this is the HIG on the daily chart. Again, this is the high yield corporate debt. Uh, Usually selling in this will usually indicate that there's going to be selling within the equity market. Now, the ADL has been tapering off, and kind of the full range of tech, we've been seeing the tapering of the ADL. Um, I do think some of this selling is a signal because generally when we're seeing the major pushes upward, it's usually pretty aggressive within the HIG. Um, we did see that earlier within the year. We saw that within the early summertime, and now we're starting to see some selling and starting to see a little bit of struggle. And usually when you start to see that within the HIG, it leads into a larger sell-off. So I am looking to that. Now, Bitcoin right now, Bitcoin looks really strong. Over pretty much every single time frame, the monthly, the weekly, the daily, it's all very strong. Bulls should be expecting that move up to the 123,000, which it got close to. It did not complete all the way. It can still pull that move up the double top and head down, which if it does head down from here, you can probably be looking towards that 98 range before you get a major bounce. Um, but I know Bitcoin looks bullish right now. And with Bitcoin looking bullish, usually the market follows Bitcoin. But we have been seeing a major divergence because the dollar has been pulling downward quite a bit, and that's um usually in the past Bitcoin was a direct inverse of the dollar. But that has kind of separated. But as of recently, we've been seeing that correlation picking back up. And while the dollar hasn't been, uh, having the best days over the past few sessions, it has been seeing some bullish upside. And if we see the dollar pull back up to the $100 range, then that's going to weigh extremely heavy on not only Bitcoin, but the equity market, the options market, the treasury market. So just be really aware of the dollar right now. Um, as this continues to climb, this causes a lot of turmoil within the Japanese market, and the Japanese market is, basically the collateral house of the world. So if Japan has collateral issues, it's not a good thing. It's caused multiple sell-offs that we have seen already within the last 2 years, so we don't want that to continue. Um, I mean, the Bears do obviously right now, and those of us with UVIX obviously want to sell off, but for the grand scheme of things, the dollar pulling upwards not good, so we will see where that goes. Now, I think that's it. Yeah, I think that's it. All right. Have a good night, everybody. Have a good day. Trade safe tomorrow. Again, I will not be making a video very likely tomorrow night. Um, My wife is having a minor ear surgery, but it's still significant enough to where um she's probably going to be out of commission and I'm going to, have to help her with things and everything else. So I don't want to be focusing on the market at all. Um so yeah, I'll see you all very likely Wednesday night. Uh I look forward to seeing the CPI in the morning. But other than that, have a great night, take care, trade safe, and I will talk to you in the next one.